All right, we move on to point two. Dollar will continue to lose value. Now, those of you who've been following currency prices, those of you who've been following gold, silver, platinum, and palladium prices, as one of our partners at FOI, Manu Sharma, does. Manu Sharma is an economist. He's also a pollster, a psephologist, and he is a numbers man. And we've been looking at numbers together, and it seems very clearly that a combination of trade and monetary policies coupled with a government debt crisis will keep pushing the US dollar down. The Trump administration's faith in the US dollar's unassailability is not supported by real world data. And this is adding to concern over the dollar's safe haven status. Now, let's talk about what people in the US Treasury are saying, obviously off the record. No one dares to speak on the record, even in normal times, as Glenn Carle will tell you. He served in the CIA. And during these times, people certainly don't say things on the record. And they are saying that the political leadership is no longer serious about tackling constantly mounting debt. They say that the US will eventually be unable to service government debt in its current form or structure. The Republicans just want to give away tax breaks. The Democrats just want to keep spending. The Republicans also spend, to be fair. They want to spend more, perhaps on different stuff, more aircraft carriers, I suppose. And the Democrats probably want...
If I just, for one second, respected economists from as far right as you wish to go to as far left as you wish to go, all concur in this point that the American political system has been unable, is showing no willingness to, and has proven itself incapable, of addressing
the latest
problem.
budget.
But that it is actually, once again, an existential issue. Not today, but becoming an existential issue for the global economy, the U.S. economy, and U.S. political system and society.
Yes, indeed. And we expect further downward pressure on the US dollar because existing holders of dollars and treasury bills may start switching to alternative currencies to avoid exchange rate losses. And the most worrying thing is that policymakers do not appear to be concerned. And this holds true for Treasury Secretary Scott Bessent. This holds true for, obviously, US President Donald Trump. This holds true for Commerce Secretary Howard Lutnick. This holds true also on the other side for the new bright shining hope of the Democratic Party, Zohran Mamdani, who in all probability will be the mayor of New York. And his focus is on distribution of resources, redistribution of resources, better social services, all of which may be very laudable. But the reality is that there is a ticking time bomb of deficits and debts, but no one seems to be really bothered in the political world. Now, interestingly, if we take a step back and we look at things a little more conceptually, many US policymakers appear to believe in the dollar milkshake theory. Now, what is this dollar milkshake theory? The theory is that a strong dollar, the straw, sucks up liquidity from the global markets, the milkshake, into dollar-denominated debt and assets. So why is the US dollar strong? Well, according to this theory, not because of markets, not because of superiority of technology or confidence in future growth, but because of expansionary monetary policy distortions. Because the US can provide cheap credit, because its market interventions have created a global economic order in which capital is allocated not on the basis of productivity, innovation, or comparative advantage, but instead on the relative ease of financial arbitrage because of the financialization, the excessive financialization of the global economy. At least that's my point of view, the excessive bit. Because of that, no currency, the Swiss franc may have a higher value than, or may appreciate compared relative to the US dollar, but it does not have the liquidity. Gold may appreciate. Actually, it's crossed, as you just heard earlier, or some of you heard earlier, the $3,500 per troy ounce mark. It still doesn't have the liquidity. You can't carry bags of gold to exchange assets. And so the only true safe currency in the world is the dollar. And ironically, greater geopolitical turbulence is likely to lead to a greater demand for dollars. And you can take the example of the plummeting of the Indian rupee as an example that, look, there is geopolitical turmoil in South Asia or the Indian subcontinent, and people are buying dollars and dumping rupees. However, that theory ignores something very pertinent, the real world. The dollar has actually been depreciating against almost all other major currencies. And we have a very nice graph, which you can look at it later. We will share it with you, or you can look at it now. It's part of our geopolitical risk monitor. And since January 2nd, 2025 to 12 September 2025, the dollar has slipped from 109.39 to 97.61, against a basket of major currencies. Now the dollar has depreciated even more. It's gone from 0.376 during the same time period to 0.270 against gold. So the reality is that the dollar is not doing as well as the theory claims, and perhaps like the heliocentric theory of the universe that held sway for a while until Galileo appeared, or Copernicus appeared, and a whole bunch of other people followed. That too was once debunked, and so might this theory too. The other thing which has been an unintended consequences of the Joe Biden administration's actions against Russia is that the freezing of Russian assets has made other countries nervous. So in 2022, of course, Russia invaded Ukraine. The war still continues. The US and allies prevented Russia from accessing about $300 billion of sovereign Russian financial assets held in Western financial institutions. The interest, and income of these assets is partially diverted to Ukraine. Now, this has made countries like China, this has made countries like India, this has made countries even like Brazil, because you see the tiff between Brazil and the US right now. Lula is not exactly very fond of Donald Trump. Ignacio Lula, if I remember Lula da Silva, sorry, if I remember his name correctly, and his full name is quite a long one. And Lula's predecessor, Jair Bolsonaro, has gone to jail. A court sentenced him to jail, and Donald Trump has come out on the side of Jair. And so if you are Brazil, will you have faith in keeping money in dollars? The answer is, well, a precedent has already been set under the previous presidency. This presidency is far more autocratic and reactive. So you say, okay, maybe, just maybe, we will diversify. So in addition, apart from all this financial sanctions bit, in addition, the US has imposed tariffs even on its closest trading partners and allies. And this has really shaken confidence in US assets, even in places like the UK, which has just hosted Donald Trump. In fact, one of the things we forgot to mention in our roundup is Donald Trump went to the UK and had a lovely banquet with Prince Charles. Now even US allies are a little wary of US assets, and central banks are now turning to non-US assets, especially gold and even silver. Now, Deutsche Bank has reported that hedged instruments into the US bonds and equities are outstripping unhedged holdings for the first time in 4 years. At the start of 2025, only 20% of foreign domiciled US equity exchange traded funds were hedged. Over the last 3 months, 80% of the $7 billion invested has been hedged. So our sources in New York, in London, in Dubai, in Singapore, and in Frankfurt agree that the hedge dollar moment has arrived. Now, there's one more thing which we covered last time, which was the Trump administration's pressure on institutions, and especially the Fed. I'll hand it over to you, Glenn. Just 1 minute. I'll wrap this up.
Sure.
As we've talked in the past, US President Donald Trump and US Treasury Secretary Scott Bessent have been putting pressure on the Fed to cut rates. They appointed key advisor Stephen Mirren to the Federal Reserve's Board of Governors before the interest rates policy meeting. Note, he was the only dissenting member who wanted an even higher interest rate cut. And so this pressure on the Fed to cut interest rates makes foreigners believe that the administration's maneuvers will succeed, this will fuel inflation, and this will devalue or depreciate the dollar even further. Over to you, Glenn.
Yeah, I think I'll be a little reductionist here. And you've presented elements, anyway, of what I would say, I think I can fairly say is the outsider, the non-American's perspective or interpretation, an attempt to understand what the heck the United States government is doing economically. And I can provide, not just by who I am, but intentionally also, so the insiders. And we don't need to have an assumption that's implicit in the milkshake dollar theory of malign, diabolical plotting by devious, secret American, politicians. Classic economic, not theory, classic economics explains what's happening compellingly, I would argue, which is that the utter incompetence of the Trump administration explains the decline of the dollar since he's back in office. Has fallen, I thought it was 7% since in the last 6 months. Your figures indicate it's been more over a longer period of time. It doesn't matter. The trend is down and will continue. And we don't need this milkshake theory. It's certain that America benefits in ways that are unique, not necessarily fair, and partially intentionally designed by having the dollar and the Bretton Woods system, to the extent it's created the world that we live in economically, continue to have the dollar with advantages from a cost of investment perspective for the United States and advantage, and so on and so forth. However,
and the UK once had this advantage. The pound was the reserve currency of the world. The UK actually physically ruled a third of the globe.
But none of that would be possible were the structure and the foundations of the economy to which the currency is based or represents were not the strongest. And the reason the dollar has been strong, the American economy has been strong, is because total factor of productivity of the United States remains substantially greater, even after the chaos that Trump has introduced, substantially greater than any country on earth. Any country.
Indeed.
The growth rate is
Europe
larger.
Actually has fallen
Capital
behind.
is larger.
Europe actually has fallen behind in the last 20 years.
Yeah, absolutely. The percentage of the world's gross national product is larger. The most important market in the world remains the United States. the number of patents obtained or applied for, of inventions, the amount of money in absolute terms for research, and by all of these measures of the foundations of economic strength, the United States, despite all of the chaos recently and trends, remains by far first in almost every index. Why has the dollar been declining? It's been declining because Donald Trump is attacking the independence of the Federal Reserve, which sets interest rates, which determine the strength of the dollar. Because he's raised tariffs, taxes. At the same time, he has increased spending and reduced revenues, which will cause inflation, weaken the dollar progressively. And that simply is an economic fact. There's no plot involved whatsoever. Every step that the administration has taken, I think almost literally every step, has eroded or challenged or undermined, whatever word you want to use, one or another of the pillars that lead to economic strength and therefore a currency's strength. And those things are only now beginning to take effect. Those things being the policies that the Trump administration is putting in place only now are taking effect. Just the one little point that we can all be ironic and derisive about, Trump's statement at the United Nations that global warming is a big hoax and everybody's a fool except for him and the world. That alone is so delusional, so destructive to reality, that it will undermine the economic strength, the coherency of the American government, therefore economic strength of the American economy, and the strength of the dollar relative to others. And China is a very competent, very powerful, very large, growing economy. And the percentage of international transactions organically, because of the rise of China's economic strength, and intentionally because of policy measures taken by the Chinese in particular, but Europeans too, and other countries too, is slowly, not decisively, but slowly changing the percentage of global trade and currency exchanges done in denominations other than the dollar, which also will weaken the strength of the dollar. So where to place the blame is pretty clear. And we don't need an explanation of some sort of devious theoretical construct. And the dollar will continue to weaken. Inflation will continue to rise in an accumulating rate for the foreseeable future. And that is long-term, contributing also to economic and political stress in the United States and undermining America's centrality.
Join the conversation at Fair Observer and subscribe to our YouTube channel.